an Olipop core weave, which I'm excited about.
Yeah.
Could be one of the first IPOs we see next year. So we had made those investments. Now it's about fund two. We're continuing with the private market. So for clients looking to rebalance but still want that growth potential, private markets, I think, is a great way to go.
So private markets, so you're not necessarily speaking about private equity or private credit. You're actually early venture, like
Yes.
in companies that have not yet gone public.
Not yet gone public. For us, it's not early venture. It's the later stage growth companies that we're looking at. But when we start thinking of AI, for example, all the money that has been spent in AI and investments in AI, we had AI infrastructure investments. What's round two of that, or what's the next stage of that? How is AI? What are the applications of AI? So you may have heard of companies like Harvey, for example, that they're a co-pilot for lawyers, or Magic, co-pilot for coding teams. So AI in use in a way that will actually have continued productivity gains. I think that's what we're excited about.
Like, is that what Anurag was talking? He was talking about software, right? In terms of AI.
Same
so
thing.
Like platforms, right?
Yeah, the idea of like incorporating these, not necessarily chatbots, but AI assistants, and Salesforce is betting big on that too. Insomnia cookies.
Yes.
Have you had an insomnia cookie?
I have not had it.
Pretty good. Open late, order them.
Do you do this? Have you done this?
Yeah. Totally. Yeah.
Okay.
So
who doesn't
easy.
love cookies in the middle of the night?
Within 30 minutes, warm, baked to your door.
Elizabeth, our YouTube producer, saying that she had so much insomnia in college. The delivery guy knew her, so that's a good sign. That's one of your investments too. But there's like it's like Krispy Kreme had some, JB Holdings had some. What happened there? Like what's the status of that investment?
Yeah, so they're growing great. I mean, they're expanding. We know them in New York City. They're less well known across the U.S., but they're expanding. So we're really excited about them. But that's another example of a CPG company, a consumer goods company, similar to Olipop that we like. So for round two, fund two, we're looking at additional consumer names. But again, as I mentioned, the AI application, that's a big
now
part
I just
of
want
it.
a cookie.
Okay, so from drones at Anduril to cookies
Yes.
at Insomnia Cookies, the investments sort of run the gamut.
Can I get a drone to bring me a cookie right now?
Those are not the type of drone, you don't want these drones near you at Anduril.
Yeah,
these are not the friendly drones, let's just say that.
Sevesti, thank you so much. Really appreciate it. Happy holidays. Great to have you back in studio. She is CEO of Goldvest Advisory. You are listening and watching Bloomberg Business Week.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we've got just about 7 minutes until we ring the closing bell on this Wednesday, December 11th. We're going to head over to our TV colleagues. Beyond the Bell come in just a moment, walk you down to the close. Also, Adobe earnings coming after the close. We got a little bit of a preview with Anurag Rana. Why are you smiling?
I'm smiling because this one goes out to Paul Sweeney. Because he loves Munis.
So it has to do, I thought it was going to be like...
He loves Munis and he loves Deer Valley.
RTO, Return to the Office.
Munis and Deer Valley. That's what he loves. You combine those two things, you got yourself a Bloomberg News story about municipal finance.
What do we got?
Deer Valley Resort, it's the winter playground for the Kardashians and others, including Paul Sweeney, who have searched for slopeside luxury. They're on their way to becoming one of the largest ski resorts in North America. It's a 5-minute drive from Park City. It's under an hour away from the nearest international airport. That would be Salt Lake City. A new development is expected to more than double the resort's ski terrain, an additional 3,700 acres, 16 new lifts, and a 10-passenger gondola. And they're going to the high-yield municipal
Didn't Paul
debt
recently
market.
talk about when, like, he's done, you know, when you're old?
Yeah.
He said he's going to find a really good ski slope.
Yeah,
And, like,
I didn't want to go there right now, but...
I know, but it's kind of, you know, to hear him tell
I don't know
that
if he did that on air, but...
He did, I think, do it on air, because I
Okay.
think I was listening at home or on my ride in, because that's my, you know, part of my
good.
read-in. Paul and Tom, whatever they're talking about. Yeah, but we see this, you know. First of all, I feel like all of these ski resorts, these ski companies, we continue to see them just get larger and larger, like picking up other slopes, right?
Yeah, there's this idea that
Companies.
started under Rob Katz at Vail Resorts, the Epic Pass. That
Tim's
was
a skier, in
back
case you
in,
weren't
like,
sure.
2008, 2009, maybe. Don't quote me on that exact year, but it really changed the game with bringing together this one pass that was significantly less expensive than just a pass to Vail. And since then, you've had a lot of more consolidation coming from Vail Resorts. The Deer Valley Resort is owned by and operated by Alterra Mountain Company. It's a competitor to Vail Resorts, but you do have some Vail Resorts properties in that area too.
Yeah, it's kind of interesting. And I think about, you know, you talked about the special district borrowing $300 million in high-yield muni debt to fund it. But for certain areas, right, this is about bringing tourism in. Sometimes it's now not just in ski season, but bringing them in the off season to hopefully access the facility. But you're talking about local economies who want this business in a big way. And so, yeah, this is probably how some of these measures get through ultimately.
In fact, as we note here in the story, developments such as this have become more common in state and local government debt markets, which traditionally funds public school construction, highway upgrades, airports sometimes. This year, Muni investors helped finance a vacation home golf enclave in Florida, a resort near Zion National Park and Hotel on St. Thomas in the U.S. Virgin Islands.
Did you say this because this issue, secured by certain future property and sales tax revenues generated by the project, the municipal bonds are unrated and will be sold only to qualified buyers. So it's an indication of a higher risk security. Piper Sandler, the lead underwriter on the bond sale, said investors will likely be high yield shops as well as those with an affinity for fresh powder. So you're talking about, nicely done, fresh powder. But you're talking about sophisticated investors.
Yeah, I do wonder if that's like something that is enticing to people to own a piece of future cash flows of a ski resort if you're a skier.
I think for an investor, high yield, they're hoping, you know, they make some money. There's some high risk.
Yeah, but are you going to say,
risk,
hey, you know,
and
I like going out to Utah and skiing the powder out there.
Yeah.
I'm confident that
Are you
they'll...
doing it? Are you buying? No.
Oh, I'm doing neither of those things this year. We will be skiing the powder of the Poconos this year.
Oh, nice.
Yeah.
That's super nice with the kids.
Yeah, with the kids. Yeah, throw them in ski school, get some hot chocolate, make sure they're having fun, do a couple laps while they're in ski school.
Really, really sweet.
Yeah,
But I
it should
think
be fun.
just go back to
we'll stay at your place
just going back
the night before. Is that okay? Bring the whole family?
Yeah, I'll work on that. Utah, by the way, has been growing rapidly. More than 500,000 new residents are expected to move to the state over the next decade, according to the recent projections. Offices for tech giants, including Adobe and Microsoft, have helped drive the boom, earning the Salt Lake area the moniker Silicon Slopes. Did you know that?
Well,
I did not know that.
There's a Reed Hastings connection
Yeah.
to this all.
But I didn't realize all these
yeah.
tech guys are going into it.
Yeah.
All right, folks, we are
I haven't
just...
been invited to that one yet. For some reason.
He's waiting. Right now, we're going to head over to our TV colleagues, count you down to the closing bell on this Wednesday. The closing bell, our simulcast, starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, taking you through that Closing Bell, a global simulcast. It starts right now. We're joined right now by Scarlett Fu here in the TV studio, a waving Carol Masser in her radio cage. Tim Stenovic by her side as we welcome all of our audiences across all of our platforms here on an incredible day. And I say incredible, Carol.
Did he say radio cage?
Did you say
radio
that kind of went
cage?
over your head real quick there. Relax, Carol. We're getting there. It's a beautiful cage, but we talk about a gilded cage. We talk about these animal spirits in this market, Carol Masser.
Yes.
A record high for the S&P. It looks like that's going to happen. A record high for the Nasdaq, but more importantly, some individual record highs on names like Meta, like Tesla. Names that really haven't been, and Google for that matter, Alphabet, that really haven't been at the top of the leaderboard for a while.
Yeah, pretty impressive. And I think it's, I don't know, we've been talking a lot about it in our, what did you call it? Radio cage. But just, you know how it gets to a point where the valuations people get, market folks, and say, okay, it's time, like broaden out, go to other names. And then all of a sudden these guys come roaring back and investors seem to be buying into them again. So I don't know. I always am very suspicious of when people are like the big tech rally over.
Look at just the names at the top of the NASDAQ 100 right now. They're driving it higher. You got Broadcom, you got Tesla, you got NVIDIA, Alphabet, Amazon, Meta, Microsoft, Netflix. All above, all up more than 2%.
I'm just looking at what the Magnificent Seven has done so far this month, up 11% for the month. That's compared with the Russell down about 1.5%, and the S&P 500 pretty much going nowhere, up less than 1%.
All right, well, we get the closing bells here in New York, and it is a good day for at least the S&P and the NASDAQ as the clapping starts here. And you take a look at who's ringing the bell. We're going to talk a little bit about that in a second here with the Dow Jones Industrial Average sitting this one out, down almost 100 points or 0.2%. The S&P 500 looks like it's going to close right around 6,084, so up roughly 49 points or 0.8%. The NASDAQ above 20,000, higher by about 347 points on the day or 1.8%. The NASDAQ 100 up 1.85% to be precise. And the Russell 2000 participating in today's rally, a gain of about 11 points or 0.5%.
All right, what's interesting is to see these moves up, and if you take a look at the S&P 500, guys, almost an even split in terms of ups and downs, in terms of gainers and decliners. 236 names, Scarlett, to the upside in the S&P 500, 264 to the downside.
All right, let's take a look at the sector performances here, because you'll see some lopsided moves, especially when it comes to those big tech sectors. Communication services, consumer discretionary, each up at least 2%. In the case of communication services, up 3%, and tech as a group up 1.5%. That's largely on Broadcom. On the downside, healthcare losing 1.3%, consumer staples and utilities also down by about 0.5%.
All right, let me get to some of the individual gainers. Got to do Broadcom. This is your top gainer in the S&P 500, top gainer in the NASDAQ 100, up about 6.6%. We know it. We've probably all talked about it throughout the day. Apple is developing a server chip designed especially for AI, working with Broadcom on the chip's networking technology. This is from the information, citing a person with direct knowledge
I'm so
of the
confused
project.
by this relationship between
Why?
Apple and Broadcom. I don't know, because first it was like they were breaking up with Broadcom and Broadcom was falling. Then it was like, no, actually they're embracing Broadcom. What's going on?
Qualcomm's the
Qualcomm.
boyfriend that is getting tossed.
Well, I know. Well, no, Qualcomm. But I'm talking about Broadcom. The other com.
Yeah, the other com. No,
Yeah.
but they also extended a deal that they had for the next few years, too. So it's like they're picking and choosing which one of the chip guys they're going to stay with.
You know this tech community, man, frenemies, right? They work together, they hate each other, they work together.
Keeping them on their toes, basically, right?
How many comms are there?
If there's money to be made, they figure out how to work together. That's all I'm going to say. All right, so that one's certainly a standout. Alphabet, it was a top gainer yesterday in the major indices, and again, we're seeing it among the biggest gainers, up about 5.5% in today's session, hitting its highest intraday ever, building on yesterday's gain of about 5.6%. That was the biggest one-day gain since April. It has gained about 12% over the past 4 trading days. That, you guys, would represent its biggest 4-day advance since November of 2022. You know, a lot of it is over the excitement over a major development in quantum computing through the use of its Willow quantum chip. I feel like AI has been a lot of what we've talked about the last year and a half, 2 years. I feel like quantum is going to be a lot of what we talk. Tesla had to name that one, hitting its first intraday record record since 2021, again, driven by the company's self-driving ambitions under a Trump administration. A lot of optimism over that. Also, we should point out that today we saw Elon Musk topping $400 billion in wealth, first person to ever reach that in net worth. And I also want to point out, did you know that the stock, Tesla's already up about 19-20% this month already after what, a 40% gain in November. So just kind of blowing it out. And this one is courtesy of Tim. Also for you, Romaine, I know you love those small caps. Candle Therapeutics up 68%.
What?
Triggered. It's a bio clinical
candle,
stage.
not candle.
Yeah, yeah, candle. Well,
He was thinking fragrant
Candle.
candles.
Candle it is, yeah.
Okay.
It was up 216% at one day, triggered a circuit breaker, finished the day with a 68%, clinical stage biopharma company,
What's the
late
market
stage
cap?
study. I know, but you
Yeah.
talk small caps
I know,
all the
I know.
time.
I'm
You
just-
talk about how it's so
I know.
important.
It is important.
Anyway,
Had a good year,
Yeah.
right?
late stage study of its
Yeah.
CAN 2409 product candidate.
Yeah.
Key goal in prostate cancer. It's an important one.
Yeah,
so
it is very important. I
Yeah.
didn't mean to make light of it, but
yeah. I'll just stay
Good
in my
point
little
there.
cage and,
That's right.
take the abuse. Go home. All right, Tim.
Okay, here we go. Look at that. I got three decliners.
I know. Well, you kept sending me names. You
I
got to do
three
this. You got to do
decliners. Follow the
this.
rules here. Uber down 5.8% today. Uber and Lyft shares both fell following GM's decision to stop funding its robotaxi development over in its cruise unit. Mandeep Singh over at Bloomberg Intelligence, he said at first glance it appears to put the capital onus on Uber to fund the program, even if it is to stay alive, which we're not sure is realistic or desired from an Uber perspective. And it raises the question of whether AV economics can actually work at all. So a lot of questions about autonomous vehicles in the wake of GM pulling the plug on this late yesterday.
Speaking of,
Hey, yeah.
Yeah, go ahead.
Microsoft sees about an $800 million charge in the second quarter because of its stake in GM Cruise.
Oh,
It
look
just
at
came
that.
out with their
Just crossing.
8K.
Yeah.
They have a minority investment in Cruise. They've had that since January of 2021, and they had to sort of write that down now because of it.
Look at that. Sometimes the timing is perfect.
Perfect.
Thanks for the assist, Alex. Do
You're
appreciate
welcome.
that. Walgreens Boots Alliance shares fell today by 5.6%. It wasn't the only healthcare/pharmaceutical chain company to close lower today. CVS shares fell 6.2% to close at the lowest, going back to 2013. Walgreens Boots Alliance shares surged yesterday by as much as 28% following that report that Sycamore Partners would acquire the company. Today shares giving back some of those gains. Romaine, I know you got your eye on some earnings crossing.
Yeah, earnings season, of course, never stops. Adobe out with its most recent report here in the fourth quarter, adjusted EPS of about $4.81. That's a beat. The street was looking for $4.67. Revenue up about 11% in the quarter, $5.61 billion. That's also a beat as well. And subscription revenue up about 13%. We should point out product revenue, of course, the business they've kind of been shunning to a certain extent. That was down by about 30%, but that's one of the smaller parts of their business. Their full year, 2025 full year forecast, they see adjusted EPS in the range of $20.20 a share to $20.50 a share. That's pretty much right around what the street was looking for. The average estimate was $20.52.
All right, we'll dig into that a little bit further, but we also have earnings crossing from a retailer, Oxford Industries, Lilly Pulitzer, Tommy Bahamas. Yes, thank you, Kay. Thank you, Finley, for giving me that heads up on it. Oxford Industries coming out with net sales for the quarter, fourth quarter net sales of $375 to $395 million. Analysts were looking for $389.2 million. Fourth quarter adjusted EPS, this is the outlook, of $1.18 to $1.38. That is much lower than the anticipated estimate of $1.55. Full year net sales anywhere from $1.5 to $1.52 billion. That is somewhat lower than its previous range of up to $1.54 billion. And for the quarter that did end, it reported a loss of 11 cents that was wider than the anticipated earnings per share gain of 9.3 cents. I'm not sure that we're comparing like with like there. Nevertheless, stock just marginally higher right now.
All right, we're also taking a look at Jay Jill here. The CEO, Claire Spotford, is going to retire in April. We're getting that headline. The third quarter earnings, though, coming in stronger than estimated, coming in about 89 cents a share. Going back to Adobe, guys, real quick, that digital media segment, if you take a look at its net new annualized recurring revenue, seemed to beat estimates, coming in at $578 million. It beat estimates, but that stock is still down just a bit.
Yeah, shares. Go ahead, Mermaid.
Well, it's kind of interesting, too, because even when you look at some of the other forecasts they're giving, I'm trying to kind of make sense of why we're seeing the drop in the share price here. It does look like when you talk about a forecast, is not really a forecast for a tremendous amount of growth. I mean, basically the numbers they're giving on the revenue side and on the bottom line are just maybe a tight, just a little bit of a slightly below the average of street estimates. But again, I think it's a representative of that year-over-year growth not being as strong as what investors have gotten used to.
Yeah, I think it's that 2025 year forecast. It sees adjusted earnings per share $20.20 to $20.50. That estimate was for $20.52, so coming up just shy there. And then that first quarter forecast, $4.95 to $5 for EPS. Estimate was for $4.95. So maybe that's what it is.
Yeah, just maybe looking for a little bit more. The CFO also some commentary. We expect an approximate $200 million headwind to fiscal year 2025 revenue as a result of the effect of foreign exchange and a smaller impact of the continued move to subscriptions from perpetual offerings. So again, a little context around that report.
Perpetual.
You guys saw
like
the
ownership?
Sora. Did you see that OpenAI Sora was released this week?
question.
The video generation tool?
Yes, we did.
I wonder if there's going to be some questions from analysts about how that competes with Firefly and all the image generation that we're seeing from startups getting on Adobe's turf.
There's so much competition in this space.
Yeah.
Yes.
I guess Adobe would say, this is what we have is copyright safe, so if you use it, you won't get in trouble. There's some, it's understanding how it's trained, I think, is becoming a big part of the conversation.
All right, we got to go back to our cage. So really fun, really appreciated that. This was fun. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We do it across the Bloomberg world. We will see you again, same time, same place tomorrow for the closing bell.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Masser. I am Tim Stenevec. We're here in the Bloomberg Interactive Brokers studio here in New York City.
Yeah.
We got this firefighters, the story I have from California. I've been keeping an eye on this for a couple days, Carol. Firefighters made some gains containing a raging wildfire that threatens Malibu, even as the burn area doubled in size in a day. And high wind warnings are forecast to persist through much of Wednesday. It's called the Franklin Fire. It's burned almost 4,000 acres. It's still only 7% contained. That's according to CAL FIRE, the California Department of Forestry and Fire Protection. But decreased wind, cooler temperatures, and higher humidity overnight are helping firefighters gain the upper hand in some areas. That's according to the Los Angeles County Fire Chief. We got with us John Gittleson, Los Angeles Bureau Chief and Real Estate and Investing Reporter for Bloomberg News. He joins us from our Los Angeles Bureau. He's been reporting on this fire for a couple of days. John, good to have you with us. I was struck by what we heard from Governor Gavin Newsom about the idea and the concept of fire season. Typically, you sort of start to get more rains in December. Fire season kind of wraps up in the fall. But Governor Newsom saying fire season is all the time now?
Yeah, actually, his predecessor, Jerry Brown, said fire season is year-round now. That was when we were going through some severe droughts. The last couple of years, we got a lot of rain, which allowed a lot of plants to grow. This year, though, in Malibu, actually Malibu's neighbor, Santa Monica, they've only gotten 1/10 of an inch of rain since the 1st of July. Usually they have 1.5 inches. That's like the season norm to date. And so there's a possibility of rain maybe tomorrow, but a 40% chance. So far, though, we're just, everything's drying out. And then you get these Santa Ana seasonal winds that just suck all the moisture out of every plant, making, a great kindling for a fire.
Tell me what you've been seeing. I know the Bloomberg offices in LA, it's a pretty incredible view, but when there's fires, it's a pretty rough view. So I'm just curious what you've been seeing as you've been either at the office or in and around the area.
Well, you can't, from our office, fortunately or unfortunately, see the smoke, just because that direction of the view is obscured.
Yeah.
But imagine, if you will, going up the coast. There is a lot of smoke, and the people that I've talked to who are in Malibu now are saying, I was just on the phone with the mayor of Malibu, who told me that he looks out his window and he sees a helicopter dropping Phos-Chek, which is the flame retardant stuff, just like right outside of his window, where flames are falling between where he is and Pepperdine University, which was basically surrounded by fire, but the firefighters managed to save the structures there.
Yeah, my understanding, Pepperdine University has specially designed some of its facilities to be shelter-in-place facilities during a situation such as this, because it is so difficult to evacuate from the area. And what I mean by that is making sure that there is no brush within certain distances of the building, so students end up staying on campus and hopefully remaining safe during times like this. The thing, though, that we talk about, and I'm from California, John, so I grew up with this, but it wasn't like this when I was growing up in the 1990s and 2000s. It's gotten worse now. It's a fact of life that you deal with fires in California. And then I'm wondering, from your perspective, reporting on real estate, the way that you're seeing it affect insurance companies, the insurability of some of these areas that you write about, and just how you're looking at it.
Oh, it's definitely a big factor in the cost and availability of real estate. I mean, California is already one of the least affordable places. You go to a place like Malibu, if you want to insure a place, which you have to do if you have a mortgage, the cost of insurance is skyrocketed, and in many places, insurers won't even write a policy. So there are a lot of people that self-insure. There's also a strong move of having defensible space, which is like what they got at Pepperdine University, where basically you keep all the plants, keep anything flammable, hundreds of feet or as far as you can away from your structure, so that there is less likelihood of sparks flying there, and also make your structures not out of wood, but out of materials that don't catch fire very easily.
Can you explain the concept of self-insurance and what some people are doing in the area?
Well, basically, self-insurance, you could also call it going naked, where all you do is like have enough money in the bank or some other source of insurance, enough cash so that if your place burned down, you pay for it and replace it. There are private insurance. There is a state insurance policy which covers up to $4 million limit, which there's a lot of places in Malibu, for example, costs a lot more to replace not only the structure but the contents. When you get above that level, you can either not have any insurance and just hope that less than $4 million burns, or there are private insurers who will offer different levels of insurance, Lloyd's of London type of people. So that is an option. Or, like I say, a lot of people are so wealthy with these big estates. I don't know what kind of insurance Beyonce has on her place, for example, but that costs almost $200 million, and the contents are, presumably, there's a lot of expensive art in there. I haven't visited it yet.
With no, all joking aside, maybe a private fleet of firefighters to protect a building such as that. I know in the past, insurance companies have done that.
Yeah, that's another thing that, I mean, you can hire private people to foam your place, to provide a bunch of coverage. A lot of those guys, they'll only stick around for so long. I mean, they're not going to put their lives at risk. But if you have the kind of property that, is hundreds of millions of dollars, you can do the defensible space and do a pretty good job, like Pepperdine University did, of being able to protect your structures, so that while they were surrounded by fires, and some of the fires got very close and, really scared a lot of those students who were spending the night in the library, in the end, it was a better place to be than outside and trying to flee down some blocked up road in the middle of a fire.
John, I remember a few years ago, I think it was a Business Week story, and it basically talked, I can't remember the city, town, the state, but it was basically an area, I almost want to say like New Orleans or Louisiana, where municipalities were buying up property that kept getting impacted by climate change and floods and so on and so forth, and paying people market-going rates, because they're just like, first of all, we don't have the resources to protect people anymore. Is any changes happening in California as a result, Southern California or elsewhere throughout the state, where people are thinking maybe we don't build there or maybe we do something differently because of the impact of fires and climate change?
I mean, that's often a consideration when you're talking about new developments. There's a big housing development north of Los Angeles that there was a lot of community debate, and the Tejon Ranch is what it's called. faced a lot of resistance because of concerns about wildfires taking over and other environmental concerns. I mean, California generally has long been a place where environmental considerations can block developments.
Yeah.
And then you have the inability to get insurance. So basically, it impacts affordability. If you're rich enough, you can buy a place and build it anywhere, pretty much.
Listen, we're so glad we could check in with you. We wish it was about a more upbeat topic, but stay safe, and I'm sure we'll be talking to you again soon. John Gittleson, LA Bureau Chief here at Bloomberg News, real estate investing reporter also at Bloomberg. Coming up, special guest. She was a former co-host of What Not to Wear. She's doing something else, though. We're going to get the details.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on Adobe shares after hours, down now by 5.5%. Adobe did give a disappointing annual sales outlook, underscoring anxieties of the creative software giant could be disrupted by emerging AI-based startups. Again, after hours. Right now, we have got Adobe down by just about 6.2%. Investors' enthusiasm for tech giants sent stocks higher today. In fact, NASDAQ had its first close ever above 20,000. NASDAQ at a record 20,034, up 1.8%. The S&P up 49, up 0.8%. The Dow down 99. For the Dow Jones Industrial Average, a decline today of 0.2%. 10-year 4.26%. The 2-year 4.15%. Gold up 0.9%. 27.17 the ounce. And West Texas Intermediate crude up 2.5%. 70.32 a barrel. Right now we're looking at Bitcoin just about $101,000, up today by 4.2%. Again, recapping after earnings, Adobe down by almost 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF helps you respond to crises swiftly. Open your JCF donor-advised fund now to secure your tax deduction. Visit jcfny.org or call 212-752-8277.
All right, everybody, full disclosure, I'm a fan of our next guest, Trini Whittle, from her days co-hosting What Not to Wear on BBC. Also a fan, our YouTube producer, Elizabeth Cedron. She's much younger than me, which just goes to show the appeal of the work that Trini Whittle has done and continues to do. She's a businesswoman, entrepreneur, supports other women in figuring out their ventures, really supportive. Great to have with us in studio the CEO and founder of the digital-first beauty brand, Trini London, here in our Bloomberg Interactive Broker studio. Welcome, welcome. How are you?
So great to be here.
Well, it's great. It's great to have you here. I want to go back. We have a nice chunk of time. I think about What Not to Wear and makeover shows. I feel like a lot of it's commonplace, but you and Susanna really were onto something in its early days. You had a column together, then you did the show. Take us back there, because you embraced women in a very warm and inclusive way, and it's not always the case.
I think it's interesting because I think there's an element that women want to feel empowered, but they also want some basic rules in which they can make their own decisions. And sometimes when we don't know which way to go, it's much more challenging to take a stance. So I think we came along at a time in the 90s when we just gave some rules. We did a show which was, titles that TV make, but it was based on a column called What Not to Wear, and it was just about the first time perhaps saying, everyone is different. Everyone has different body shape. It doesn't matter your size. Everyone has different skin, hair, and eye. And so it resonated because that language perhaps hadn't been spoken before. And interestingly, we'd done a book before which sold 13,000 copies. We did a TV show. The next
I think
book.
I have the book. I'm going to be very quite honest with you.
But that first book, nobody has. They didn't
so maybe it's the second
want to
book.
do a book deal. But then after we did that show, we sold 1 million copies of the book. Because there was, and it was very basic rules. It was, if you have small boobs, do this. If you have big boobs, and don't wear a polo neck if you have. It just, people come up and say, I never do that again because of you. And so that was very interesting then, all right? But the way the story was told on TV was shock TV. It was just before times of a show like The Swan, which was that extreme makeover. It was the beginning of very different TV. And when we then had done that for 10 years, and we stopped doing it in the UK because other people came up, what I loved most, it was challenging at the time because we were suddenly not wanted, but we went to MIPCOM, which is a TV conference in Cannes, and about 12 countries bought the format, from Israel to Poland to India to Australia to Scandinavia. So I went from just understanding British women and America to then understanding it doesn't matter your religion, your age, the color of your skin, these emotional stages that we go through as women have a relevance on our confidence levels, on how we want to project ourselves. And that was fantastic research. Everything I've done probably since I was 6.5 is research for where I am now.
I want to talk a little bit about,
things
go
are a
ahead,
journey, right? Like you think about it, right? The process. Yeah, go ahead.
I just want to talk a little bit about the changing media landscape over that time, because a lot has happened in the last 25, 30 years since that show. And I'm wondering, when you look around the landscape today, whether you see something on streaming, whether you see what's going on TikTok, on Instagram Reels, where you kind of see the influence of what you were doing on the BBC.
I think the point of reference where we get our influence has changed, and I love evolution. I love the fact that there was a very small, controlled set of people who gave you your influence, and now it's all up for grabs, because I think that's an egalitarian state. And you choose. You don't have to get a subscription to Vogue magazine. You can choose who you follow and what you like. So you have far more individual. It's like you're choosing your meal from an a la carte menu. It's not a set menu.
Right.
So the benefit of that evolution has been that you can go and be influenced by somebody who's far more like you individually as a person, or somebody you aspire to be, as opposed to a brand setting the tone like a magazine or a newspaper title that we've all followed for years.
Do you feel like, well, let's get to what you're doing now, Trinity London, right?
Yep.
It's funny, I brought up your name in our makeup room this morning, and I have a beloved makeup artist, Pam. She's worked with Charlotte Tilbury, she's worked with, I think, Prescriptives, maybe Bobbi Brown, like a lot of brands. She's like, oh my God, she's doing, she talked about your brand. It's a crowded space, though. You launched in 2017.
Mm-hmm.
When you thought about it, and your journey you talk about of what you've learned, how did you think about entering the space, what you wanted to do differently? Because it is so competitive.
I knew exactly what I wanted to do. The challenge was convincing investors it was the right choice. So I knew the biggest white space was a 35-plus woman. I knew that she'd been talked to with companies that were represented by a 20-year-old model. I knew she felt excluded from the conversation, but she was being sold something that might be relevant for her, but wasn't in a language for her, because every advertiser is going after a younger audience, even though the older audience maybe has the money.
Right.
So there was this sort of dichotomy, and I felt that I had already organically understood this woman, and I knew what products she wanted. I knew her frustrations. I knew when she went up to the beauty counter, the challenges she had about thinking, is the person serving me here going to be, plastering me in makeup, or going to be thinking I'm younger or older? Is she going to understand me? And so I really felt that you could develop online with personalization, which I'd loved since 99 when I started my first tech company called Ready2, before even e-com.
Yeah.
But I loved personalization and I love data. So I thought, if I can build an algorithm where I can figure this woman out and I can say, tell me this about you, and we will tell you what suits you. And I pitched that this woman, 35, 40, 45, would do that. And every investor for the first 6 months, I saw 250 people, got one investor.
You saw 250 investors?
I
pitched
250 investors, and I got one investment at the beginning, and then people followed, but was very much, love the idea, but those old ladies will never buy it, so do it for a Gen X and a Gen A. Gen A wasn't even around 8 years ago. Gen X, okay. And I was like, but you don't get it. This woman will come online if she feels she's got something she can trust.
Right.
And it will deliver.
Have any of those investors come knocking since?
Yes.
How did those conversations go? I mean, they passed in an earlier round. They would have gotten a better deal.
I think a nice, there's moments in your life you celebrate. And one moment was going to a tech conference where I used to go to this tech conference every year, which will remain nameless, but I would always feel, an outsider. I'd feel I haven't got investment yet. When you're really in that pitch mode and you're trying to get people interested, and you bump into somebody who's said no to you, and you sort of like put on the brave face, and you're still committed and you still know it's going to work. You just got to find that right person.
Right.
And 3 years later, we just had an article in Forbes, and it was a very good article. It gave a value to business, which we hadn't given them. And then I went to this conference again, and there were like 4 people there who had to turn me down, and they were like, hey, Trini, we must talk. and one of them, I just couldn't, and I went, oh, we're not looking for investment right now because we're EBITDA positive. But it was just that, and I think there's moments, there's that tiny moment where you think.
But Trini, we talk about this a lot, about women entrepreneurs, even from women venture capitalists, have even a hard time getting funding.
Yes,
and it's not. And you are a known entity, and why do you think that still is?
I think it's a mix. I had to learn really how to pitch. I had to learn to speak a language I wasn't used to, because I am the type of woman who wants to go in and bring you into the world of what I see Trinity London will do,
right,
and get you to know that woman. And it's so, I'm not going to say it's overwhelming for a classic investor, but sometimes somebody wants to say, this is A, and then from A, I'll get to B, and then once I got B, I'll get to C. And so I then realized I had to tell the journey differently. I knew what they needed to know first. And, you know, I was asked a lot, how will you protect your downside? Not how will you optimize your upside? And I did feel, if I was a man in the room, would that have been the first question? Or would it be man to man, how are you going to optimize
Do you
the
think
upside?
it would not have been?
I don't know. I'm not going to judge. I think it's
Yeah,
a
I'm
type
just
of
curious.
person.
Yeah.
But I would, you know, I did have to learn that because I'm not a, you know, I've learned to be a CEO. There's 250 people in Trinity in London now, but that's been a journey. And I even got a CEO coach because I wanted to be the best CEO I could be and understand the importance of how I delegate where I'm in the weeds, you know, meeting people who say, do what only you can do, you know, otherwise you will never grow because you'll always be doing too much in the weeds. So that journey is a challenging journey for a founder to be a CEO in a business that's doing over 50 or 100 million, or, you know, as you grow, you need to have that team that is going to execute really well, and you are looking at the strategic vision of where the business is going and doing less of the everyday. So for me, the switch from that to this is a big challenge, because some days you know, this morning I'm looking at a tube, an ab we're going to do on the tube, and I want to get in the detail, you know, and that's like, is this my best time spent? But this is brand building, so sort of.
Yeah. No, it's a learning process, especially as you get bigger, right? Otherwise, you get caught in stuff. Tell us about Trinity London. You know, how big you've gotten. Talk to us about growth. We're Bloomberg. We do love numbers. Tell us what you can do.
What numbers can I tell you? I tell you what, when I started, it was the time of real growth. It was a time of, you know, it didn't matter about retention. It was only about new customer numbers. And I remember we had a sort of 50-50, and they were saying you need to be 30% existing, 70% new. And I was like, I don't agree. I want retention. I want a long-term cohort. I want the customer who will buy 4 times a year and be with me in 10 years. Right. That's the customer I want. And that was challenging. So even on my second round, the valuation I was looking for, I didn't get, because they were like, you should be 70-30. And I was like, I'm happy with 50-50.
Yeah.
And then into COVID, we had a ton of people who were waiting for us to come to a store. And because they thought I'm at home for a while, they then went and bought. And then they became customers, and those are long-term cohorts. So the, you know, reference now in the world we live in D2C is, it is about retention. It's really about retention.
But it's also about retail. Like, you haven't shunned away.
Yes.
You are direct to consumer, but you also embrace retail.
And I think retail has a part to play. Retail for a real D2C brand, like earlier D2C brands, would literally be just brand building.
Right.
But retail needs to be profitable and brand building. It can't just be brand building, because I think then you don't get to have a good EBITDA. So how do you, you know,
It's expensive, right?
It's expensive, and we did a flagship in the UK, and we spent money on that flagship, but in 3.5 months it paid for itself. So that's great. And it's, you know, in the other store in London, which is a big store, we are #1 in beauty. But here in Prince Street, I saw it I thought we have to put an inroad. We're in Saks, we have to put an inroad of our proposition of what we represent, this personalization, in a space so you can walk in the world of us, because that visual, and this is where online and offline is really interesting. If somebody's going to buy online, they need these 5 points of reference: their friend, an Instagram they follow, maybe still a magazine, maybe listening to Bloomberg Radio, but also seeing the brand physically in their country in some form in the real world is really important. So the conversion we have online, since we've got Prince Street, which I fitted out in IKEA with mirror on the top, because I thought the investment here has got to be in the buzz.
Right.
It's not going to be dumping $300,000 in a 6-month pop-up. It's going to be $4,000 at IKEA with very nice mirrors on top, because our products are great. So, you know.
Did that work? Did the IKEA part work?
It's so busy. This weekend it's so exciting, because we did a morning show this week, and we had, and also this is interesting because you don't know how well TV works. And the next day there were people who'd watched this show coming in to the store. Right. And I thought it's interesting how media works now.
So when you talk about strategy, we've talked retail, we've talked digital. What about social media and actually using the platforms to sell? Increasingly, we're seeing TikTok, Instagram becoming sort of centers of e-commerce.
TikTok Shop has been interesting, because in different territories, it's had different premiumness. We are a premium brand. So TikTok US has a slightly different inventory of things than TikTok UK. So I think they're finding their feet. I would say the US has probably more maturity. So there's more bigger brands going on there. So maybe a Charlotte Tilbury might be on TikTok Shop now.
Right.
Instagram, they did TikTok. They did a version of their shopping before, do you remember? But they're bringing back now this sort of live stream shopping, which Facebook had worked with a few years ago. And it is something that I find fascinating.
Amazon tried this years ago, too.
Amazon tried it years ago, but there is...
It's huge. It's huge in China.
It's huge in China.
Yeah.
And the whole concept of the success of QVC, and what is the modern version of QVC? It is what social media should be.
I mean, it's wild to see the stats of the people in China and how much money they make.
I mean, that woman was 15 million in a day or something insane. But that was a 10-second in a box. That's just it's an anomaly. I don't get it. It's something that's so of that culture.
So have you cracked the TikTok and the Instagram part yet?
We do it in a way that a few people do what we do, is we don't say buy. We tell you a story, and lots of people tell the story. I tell the story. Our friends of Trinity London tell the story.
Right.
And they tell a story. They're not saying buy this, it's this much, this is what's in it.
Listen, so much a part of your story, I think it was so telling about how many people you had to pitch before somebody was interested in helping to fund. You now are helping others. And tell us a little bit about, we've got about a minute and a half left here, elevator pitch your series on Instagram, because you're helping others. 30 seconds, they make a pitch to you.
Yeah, so I just felt that challenge when you're younger to get, or not younger, but when you're at a much smaller stage. So they all apply, and they have to be doing over 150,000 a year in revenue, because that's somebody who then is committed to starting a business. Used to be less, but you have to, and because you're giving precious airtime, and then they have that pitch, and then we highlight their business, and they convert, and then I also was there's something in the UK of 50 women doing over £50 million revenue a year. So we were thinking, how can we get 50 women to get over £10 million a year rev? Because that's another hick. So we're looking at that now as another concept. But it is so important to lift up other women. And I think in the 90s, it was challenging for women to lift up other women. It was very different. It was a really ruthless sense in business. And I think there is a responsibility as a woman, especially when you've been on that journey of entrepreneurship and you know how challenging it is. I went to Bhutan recently, and I now mentor this Bhutanese designer, because I just thought she really needs help, and she's fantastic. And so it's exciting to take these different women and think, how can you help them to look at the challenges they have?
Just got a few seconds left here. So what's next? Or what do you, I don't know, what's your 3-year
growth in the US, for sure. I mean, this year, it's about growth in the US.
This is an important market.
This is such an important market. This market, ultimately, for me, should be double the size of the UK. So I am a UK brand coming to the US. That is in itself a big challenge. If we look at the successful UK brands that have come here, there are not that. Tilbury, phenomenal success. Charles Tyrwhitt Shirt Company, really good success.
Stores all over.
Yeah, so it's looking at, how, as a brand, you make a US customer feel this is a brand that speaks to me. It doesn't matter the origination of where that brand started. This is a brand emotionally for me. And that's our challenge, to show American women we understand you, and this is for you, and our products are for you, and how we think about you as an individual will help you.
Well, come back and let us know how it's going as
you
settle in even more here. Trini, thank you so much. Trini Whittle, she is CEO and founder of Trinity London, joining us right here in our Bloomberg Interactive Brokers studio. Thank you so much.
Hey, also in the Bloomberg Interactive Brokers studio, somebody who's been keeping an eye on all the stocks moving in the after hours and top stories as well. Let's head on over to Charlie Pellet for a business update. Hey, Charlie.
Thank you very much, Tim and Carol. Right now, keeping an eye on Adobe. Adobe shares down 7% after hours. Adobe delivered a disappointing annual sales outlook, underscoring anxieties that the creative software giant could be disrupted by emerging artificial intelligence-based startups. And right now, we got Adobe down by 7.99%. A record today for the NASDAQ Composite Index, closing above 20,000 for the first time. 20,034 on NASDAQ, up today by 1.8%. NASDAQ up 347 points. S&P 500 Index climbed 49, up 0.8%. The Dow down 99, a decline of 0.2%. The Russell 2000 Index also advanced today, up 0.5%. CPI Wednesday, we got a benign inflation report this morning that cemented expectations that the Fed will keep cutting rates. 10-year 4.27% with a 2-year 4.15%. Gold up $24 the ounce to $27.18, up 0.9%. Bitcoin up 4.6%, $101,000, 415 right now on Bitcoin. Treasury Secretary Janet Yellen is urging the next U.S. administration to maintain the dialogue channels that she reestablished with China. She spoke today on Bloomberg Radio with our David Gora.
We've used these channels when we've taken action like export controls or our recent outbound investment restrictions to explain what we're trying to accomplish to avoid misunderstandings that can worsen the relationship needlessly.
And that's Treasury Secretary Janet Yellen. Two developing stories at this hour. The House has passed an $895 billion measure that also authorizes a 1% increase in defense spending this fiscal year and will give a double-digit pay raise to about half of the enlisted service members in the military. Also, New Jersey Transit woes tonight amid all the rain. Some New Jersey Transit trains are experiencing delays during the rush hour because of a signal issue near the Newark Drawbridge. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I do appreciate it. Shares of Adobe down about 7.2% as we speak. The company gave a disappointing annual sales outlook, underscoring anxieties that the creative software giant could be disrupted by emerging AI-based startups. That's what we were talking about earlier.
I know. There's a theme today.
Yeah, there really is. We got with us Bloomberg News earnings reporter Red Brown. Is this what is this about, Red? Is it about like the Soras of the world, the open AIs and the video generation stuff that they're showing off that has Adobe investors concerned?
No, it's exactly that. I think I saw a story yesterday of Sam Altman just saying how unprecedented the demand for their video tools were, and it doesn't seem like that's necessarily translating over to Adobe. I think we spoke yesterday about Adobe just being typically kind of a market leader in all of these creative tools, so the expectation was they would be out in front.
It's like the establishment, right, that has been doing... Anyway, go ahead.
No, I mean, it's exactly the right point, is that they are the establishment. They should be kind of out in front of this. They have plenty of money in the bank to invest in these tools, but right now we have kind of been stuck in this pattern of investors asking for AI results, and then we're still kind of not getting that from the company. So that's played out in the forecast.
They're introducing new AI features, and that includes a higher price Firefly offering, tiered subscription plans to drive growth. So they're kind of trying to figure out, right, how to juice the top line growth. But don't you feel the last 2 years, I know I'm tapping my foot. The last 2 years we've done nothing but talk about the AI, the folks out in front and center, whether it's NVIDIA or something, right, related to AI. You have to think the whole tech community is looking at this and saying, I got to get my act together, right, and figure out, and whether it's an upstart or other companies like going after the established players.
Yeah, I mean, I guess it's
I'm just making
it's harder
a statement.
than
I'm just dumping that in your lap.
I'm no tech. I can barely work my iPhone, but like I guess maybe it's not as easy as we all thought. You know, like I think there's a lot of enthusiasm about the actual AI software. They're doing amazing things already. It just could be that the first people out of the gates, which was OpenAI and some of these other smaller players that might have a cheaper option, has just been able to kind of undercut Adobe for the time being.
I've seen some, and this is the stuff that gets traction on X. Is like the videos of people doing things that look real, but then you watch it and you're like, this is totally impossible. Like defying gravity skiing and doing things that are just completely not possible, or pointing out videos that, okay, it looks normal at first blush, but then it's like you look in detail at the person's hands and you're like, there's no way that's an actual person here. And like that's the tell right now. That's part of the story. The other part of the story that I think Adobe would push back on, Red, is the idea of this stuff that's quote unquote brand safe and the training of these AI models. And Adobe has been out over the last year saying, hey, our stuff that's developed with Firefly and our other Gen AI tools will be okay for your ad campaign or your brand campaign because it was trained on images that either we own the copyright to or we have the rights to, and therefore, if you have a subscription with us, you will as well. And I wonder if to what extent that's a selling point with the corporate customers.
I would think it would be, obviously trying to mitigate as much risk as possible when it comes to like copyright infringement and things like that. But I think, what was it, Facebook's saying for so long in tech was move fast and break things. Maybe Adobe is kind of paying a little bit of a penalty for being so cautious. But still, this is probably going to be a long game, right? Like, it's not like this isn't something that's playing out quarter to quarter. This is decades. They're investing in these technologies, right? So, Adobe's track record is pretty strong, and that kind of remains to be seen whether or not it will be able to kind of turn this around.
But not strong enough, right? That closely watched metric of new creative software business, digital media, net new annual recurring revenue. I think Alex Steele highlighted it when we were doing the simulcast, will increase 11% in the fiscal year, in line with estimates, like in line. I think people, when they're thinking AI, we want surprises. Don't just meet estimates. We want to see if there's so much demand out there and you are a market leader, like we would expect things to be stronger.
Yeah, you need to blow us out of the water every single time, which is kind of an unfair bar to set for a lot of these companies. Even NVIDIA, they're kind of the leader of AI, is starting to kind of succumb to those pressures as well. So it'll be interesting as we move into 2025, whether or not everyone will kind of wrap their heads around the actual picture and what this means quarter to quarter. Be a little bit more fair to how these companies are trying to invest in a kind of a groundbreaking technology, if you take their word. So yeah, I think people do need to kind of reorientate how they're thinking about these things.
I also think about the OpenAI story we talked about earlier about the CFO saying, charging maybe, companies a monthly subscription fee or something.
Up to $200 a month.
Yeah, right? Or business users thousands of dollars a month towards AI software. And just, as they continue to offer new tools, like the models are potentially changing too in how people access stuff, and whether it's tiered pricing or so on and so forth. But yeah, this is a big hit for Adobe.
I think so, and it's a shame because
market reaction.
Right. Tim kind of said like 7%, like it wasn't anything, but I said in the aftermarket, but it's a lot for a company that's down, I think 8% on the year already. So I think that they really did need a strong result here, and unfortunately, it didn't come for the company.
Broadcom tomorrow. After following that information report that sent shares higher today.
Thanks, Tim. Thanks for the heads up.
And then Costco. Tomorrow as well.
That's right.
It's his story.
Well, Broadcom is going to have, after this Apple
Red
story.
gave us an earnings preview on Monday, Carol, when you weren't here.
Sorry.
They all just start to blend together, so if I look like a deer in the headlights.
But after the Apple story, right, of working with Broadcom, I just feel like the conversation, certainly on the analyst call, is going to change dramatically.
Yeah, I sound like a broken record maybe in here, but it's these companies that are in the actual, hardware of the AI that are benefiting from this, right? It's the Broadcoms of the world that are still getting, that's where the money actually is going. The use cases for actual AI software still seems to be a little bit up in the air. Like, Tim saying the videos just aren't as good as you really need them to be to really start to make an ad from them or anything like that.
Sounds like a broken record, doesn't he?
No, he sounds good.
I'm just kidding.
The record works. The record always works when it's Red Brown spinning.
Yeah, all right. Red Brown, keeping watch on earnings here at Bloomberg News. Red, thank you so much. Still got shares of Adobe down about 7% here in the aftermarket. Some disappointment. This is Bloomberg Business Week.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we're getting ready to wrap up here on the Wednesday edition of Bloomberg Business Week. Carol Master along Tim Stenivek here in our Bloomberg Interactive Broker Studio. Nick, it's you. Where do you want to go?
Oh, not to New Jersey right now.
What's going on?
Some New Jersey transit trains are experiencing delays just ahead of rush hour commutes due to a signal issue or signal issues near the Newark Drawbridge. Riders utilizing the Morrison-Essex, Gladstone Branch, and Montclair Boonton lines.
This isn't me, but you know who this might be?
Who?
Our beloved.
Who?
Bill Maloney.
Bill Maloney. Oh no, we're going to hear about that tomorrow.
Yeah.
They're all subjected to as much as an
Wow.
hour-long delays coming in and out of New York Penn Station. Several trains have already been canceled.
I got to tell you, it's not easy commuting around here in the New York metro area.
Well,
It's
like
rough.
Sometimes I think to myself,
Yeah.
about the economic impact of how bad the public transit is in some instances.
Yeah.
I mean, it's so rare that it's worse for me on the way home. I don't know if that's true for everybody, but
On the way home?
yeah, sometimes I just think it's so rare that I am able to commute without a hitch. And it's like, okay, well, then, if I'm late to pick up the kids, what does that mean for the people who are watching the kids?
Right.
Then they're late. If I'm late to work in the morning as a result of that, along with an entire group of people on the train,
Yeah.
then there's a productivity hit there.Got to the point back in 2019 when the summer of hell happened on the subway in New Jersey Transit, where it was like, are companies going to be enticed to have workers here and have offices here if getting in and out of Manhattan is so difficult?
I don't know. I've been commuting, in and out around the New York metro area for a long, long time, and I just feel like there's just
Has it gotten better? Has it gotten worse?
I don't know.
Is it the same?
I think the systems need some help.
I know, they do.
The subway systems, like you look at some of the new stops that have opened up, and they're beautiful, and you're like,
Yeah, for like
oh,
6 months.
no, something, but I mean, and there's some areas that are really worn down and pretty rough, and it's not always fun to be a part of.
But the
and I love
challenge
the
is-
ease of getting around because
Where's Charlie Pellet when you need him?
I know.
The challenges of a century-old system that was designed for a population that has grown quite a bit, it can only do so much. I mean, the basic concept of a train on a track, if the one ahead of you is not moving, then the one behind it will not move.
And here's the thing. A lot of people don't have choices. I certainly don't want to drive every day, and I think most people don't want to drive every day. First of all, you've got a few crossings, especially if you're coming...
It would take longer to drive.
Right, exactly. There's a cost element to it, so we need mass transportation. I am curious about the infrastructure play going forward. We've had an outgoing administration now that is put some money finally into an infrastructure spend, something that people have been talking about for a long time, and we will continue to see, or we'll see whether or not we continue to see infrastructure being highlighted and prioritized, certainly in and out of these cities. You look distracted.
I'm just looking at some of the most read stories because...
Where do you want to go?
I want to go to the New Jersey Transit awarding a bridge because it's another story about transit.
Okay.
New Jersey Transit Board members voted today to award a $444 million construction contract for the replacement of the Raritan River Bridge to Skanska-Koch, according to a release from the agency.
Oh, interesting.
Yeah, so some stuff is happening, right?
Yeah.
The current bridge along the North Jersey coastline has been in service since 1908 and was not designed to withstand the lateral forces due to ocean surges.
Yeah. Can I go a little bit more serious?
Yeah, please.
Listen, this is a story, the killing of the healthcare executive, and just following this has certainly been top of mind for so many, and understandably so. It has been among our most read stories on the Bloomberg, often the number one since it all happened. And there's a story by our John Tazzi that basically says there's a lot of concern about copycats and people doing something similar. And we have talked in the newsroom and elsewhere with guests, with other individuals. This story by John Tazzi at Bloomberg News says health insurers are taking steps to prioritize worker safety and well-being, re-examining their policies and communication strategies in response to the backlash. But you have seen on social media and other platforms where people have are voicing their frustration, right, over dealing with various corporate entities within the healthcare system. People criticizing the health insurance industry, its practices. This story by John Tazzi talks about, some jokes on The Daily Show, Jon Stewart. I'm not just singling him out, that's just how the story starts, but yeah.
Police here in New York are investigating threatening wanted posters spotted in Manhattan that depict company executives and echoed the language found on the bullets in Thompson's killing. That's according to a spokesperson from the New York City Police Department.
Yeah, and when we talked with Dr. Iman Abuzaid, who has a platform that really is for the nursing community, but she talked about the nursing community and their frustrations about delays and denials when it comes to healthcare, and they've got to deal with the patients that are dealing with that kind of policy.
Hey, we saw some records on Wall Street today. The NASDAQ higher, above 20,000 for the first time. The NASDAQ composite up 1.8%. The S&P 500 up 1.8%.
NASDAQ is now up 29% this year.
Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF helps you respond to crisis swiftly. Open your JCF donor-advised fund now to secure your tax deduction. Visit jcfny.org or call 212-752-8277.
Did you roll your eyes at me? A little bit?
We'll go back and watch the video. I'm trying to send you messages, Carol.
I know. I'm in the show, and he's like sending me a message.
Like,
we got to do business. We got to cover business when we're here. That's going to do it for us, guys, on this Wednesday. I love it.